Hello, everyone. Happy Sunday. Happy Sunday. Football playoffs going on now, but let's see who's here to do the market prep. Super busy week. So, by the way, might be getting a little more echo. We had both our home offices painted this weekend. Don't have everything back up on the walls from a sound dampening perspective, but lightened up the color, so we should be getting some better lighting for the videos. Got everything re-optimized. I think we have stuff, except for they're going to be getting some more bounce due to sound dampening not on the walls. But I hope that's not too bad. If you could give me some feedback based off the images and the sound, I would appreciate it. So we'll work on fine tuning it this week. Just wanted to give you that little bit of information. Thank you again for tuning in. Good afternoon, Patrick. How's it up in Minnesota? Evening, Charles. How is it overseas, Charles? Hello, Martinez. Happy Sunday, Options 22. Happy Sunday, George. Hope there are some good deals this week. You mean like good deals for stocks? Question: does Apple have a valid double top? Does the fact that it's been an uptrend from 24, 25 still make it a valid even though it exceeds the move? We'll take a look at Apple. All right, sound is good. Again, I'll have to fine tune it this week, but I did not have time to get everything back up on the walls. Image is better, sound is fine. Thank you, Patrick. Lots of ice, but not as bad as the NFL game. Okay. We got snow all day here today in Chicago. It's been snowing overnight and this morning, but not that bad. So let's get right down to it. Oh wait, who would people like to see? If you follow football, who would you like to see? What do we have? So who do you want to see get to the Super Bowl? I just want to know who you want to see get to the Super Bowl. If you have any opinion. If not, put it in the comments here. Anissa, good evening. Thank you so much for being here. All right, let's get through the news first this week. We have Consumer Board leading index still consensus is to still roll over. So that's what I'm going to be watching because that's the leading indicators. And when they roll over, it could be headed towards a recession. I think we're fully baked in for a recession. Other people still pricing in some magical soft landing. Tuesday, we have S&P Global Services and manufacturing and composite, all expected to still be in contraction. We have the Richmond Fed Services Index and manufacturing index. So the manufacturing still expected in expansion, services in contraction. So there's some numbers to pay attention to, but I don't think anything that's really going to rock the markets. It's going to be more earnings based this week, at least at the beginning. Wednesday is really quiet. We got mortgage stuff and we got the EIA numbers. Remember, we have the double bottom triggered in crude, and we have the EIA numbers on Wednesday. Thursday, it starts picking up with data. We have the fourth quarter advanced GDP growth rate, durable goods, GDP price index. What else do we have? Again, Thursday, so we have initial and continuing jobless claims. We have some PCE prices quarter over quarter. Those aren't as important as the Fridays, but all this comes out before the market officially opens at 8:30, so those are 1 hour ahead. We have new home sales after the open, and then we also have the Kansas City. So we have all these regional Fed indices. We have Kansas City manufacturing index still expected to be in contraction, and their composites still expecting to be in contraction. And then it quiets down, although you have Chicago Fed National Activity Index at around noon. Friday really is important. Why? These are the last PCE numbers. before the rate hike on Feb 1st. Remember, the Fed is also in quiet period, so we're not going to be getting any Fed speaky. So nice and quiet from that standpoint. But we have Friday, 1 hour before the open, all the PCE numbers, and then we have the consumer sentiment numbers final for January, 30 minutes after the open, and the inflation expectations part of that. So Friday is going to be very busy. Now, in terms of everything else, you still remember Friday. Besides healthcare, it was pretty friggin' green. All your sectors were up with healthcare. The only one really lagging, healthcare and utilities really lagging. Fed watch is actually interesting now because, I mean, it's fully baked. There is going to be a hike. There's going to be, I doubt they do anything unless the PCE numbers are off the wall strong. It's going to be that 25 hike. But then even for March, you see there is another 25 hike. So we got Feb is pricing in a 25 hike to take it from 425 to 450 current, from 450 to 475 in Feb, and then March is expected to take it to the 475 to 5. And then for May, it's expected to be the pause with only a 30% chance of another 25 bump. So it's a pretty clear roadmap. Fear and greed back in greed mode. Current market valuation. Where do we stand? We're getting higher and higher in this fairly valued, edging up towards overvalued. You can see the yield curve model strongly overvalued. The Buffett indicator is edging up to almost overvalued at this point. The P to E is overvalued. Stocks aren't a bargain here. Interest rate model fairly valued, and then you have margin debt undervalued. But if we start stripping this out, this margin debt model, this would really get bumped up. So keep that in mind. Stocks are not a bargain, and we'll get more clarity with some of these earnings. So tomorrow, then I'll get to see the comments. We have not a lot tomorrow morning. Baker Hughes, Synchronicity. But after the close, we got Logitech. What else? And then more regional banks. Tuesday, Verizon, Johnson & Johnson, Lockheed Martin, Halliburton, GE, Raytheon, 3M. Pretty busy. Pretty busy Tuesday. After the close, you got a biggie. Microsoft. Then we got Texas Instruments, Capital One, which could be interesting from credit and charge-offs and what they're doing for ramping up their losses for that. So that's going to be interesting after the close, but everything's going to be keying off of Microsoft. Wednesday, we got the biggie of Boeing, AT&T, Progressive, Abbott Labs. Those are your big ones. After the close, so many people will be watching Tesla. Again, that's before all their price. They missed on deliveries, but this is before all the major price. They did have some China price cuts, but this is before the major European and America price cuts. Then what else do you have? That's the biggie after. Then Thursday, we got American Airlines, Southwest, garbage. MasterCard will be very interesting. And what else? Northrop Grumman. So that's going on before the open. After the close, one of my favorites, Intel. But we got MasterCard before the open and Visa after the close. And a lot of people watch the Visa, especially same comments as I held for, like Capital One. But Visa is even more important from how is the consumer doing with the transactions and everything else. Is it slowing down at all? It'll be interesting to see from that aspect. Where do we sit? What else do we sit? Then Friday, we got Chevron, American Express. Those are Colgate, Palmolive. That will be interesting. Also from the consumer being able to pass along, from a consumer staples point of view, being able to pass along inflation still and their outlook on that. And then it quiets down, but that's good because Friday we got those PCE numbers. All right. Let me see where we sit. So Charles says Eagles and the Chiefs probably best match for the neutral. All right. Texans, if not Texans, no other team. Vikings, but they ain't gonna work. So Bengals. All right. Oh yeah, the Ravens dropped it. We'll get off of football in a second. I just wanted to hear some people's thoughts going into it. Hey, Daniel. Well, of course, ES is at the mercy of it. Well, the market's going to trade off of earnings for the next 2 weeks, especially the bigger ones. You know, it's going to get interesting. Now, Bob and I are really expecting the first and second quarter in earnings to be the fireworks, but it'll be interesting to see if we get any fireworks from this. See, Coco, another ignorant statement. PCE does completely matter. Did you just say stuff to get attention? PCE does matter to the Fed. Okay? More so than the CPI. So to say that, that's just ridiculous. Last Friday created double tops across multiple stops. Look like too easy for puts this week. Highly doubt it due to earnings, but set up for a fake out and a push higher towards the 200-day. Well, I'm going to get to that in a second. Again, remember, unless they're triggered, doubles their potentials. Hope Dow has some good moves this week. I didn't see anything on that. If you have information, let me know. All right. So, where do we sit with my S&P? We closed above the 62.5, so I'm at least watching for a continued run up through tomorrow. Key levels I am utilizing. Since we didn't get any real good pausing area into the close, so I can't do really solid projections. So I'm using 4002 because it's 75 harmonic and 4002, and look at the breakdown zone. You see the breakdown zone right there? Right at the harmonic. So that's my first level, and that would actually make it into a short-term potential double top. So that's really key. And then my next target would be this 4018, the 87.5 harmonic. And then I'm looking for a retest of the highs from Wednesday. So, but anywhere between this 4018 and 4035 is going to be key for the initial, but we should at least get a pausing bar before then. Now, if we do just go, I don't know, into blast off mode, and we just blow through, and this isn't just for tomorrow, but we blow through those highs from back on Wednesday. This is where it's really nice. Look at this. Look at this. Oh, you gotta love, well, I gotta love it. You don't have to do anything. So, look at this. The high area, this 4050, now reinforced by a reverse harmonic. Very key level. And then we have a cluster, 4066 to 4068. And then we have another, the retracement harmonic, this 12.5% level, with the forward harmonics from this little anchoring point right before the pullback. So we have really good upside targets. Really, really nice up there. So that's the targets I will be utilizing. Now, if we get in double top territory, we'll map out the potential double. But the real key level that matters then is this low from Thursday, 39.0175. That's going to be the key level that I will be utilizing. Now, on a pullback, my pullback, if we pull back first, 30, I'm still expecting the higher prices because we closed above the harmonic, but 39.68 to about 39.70. And then I would be using 39.51, 39.52. This is a clear path move on that 4-hour, and on the 1 hour, the only pausing area is slightly below this 39.51.52, or right around 39.48. So there's my map I'm expecting still higher prices to go into at least the beginning of the week. Daily cycles trying to get to a bottom and turning up. Weekly cycles still have a room to run potentially higher. Now, once we get daily and weekly cycles to the top again, then I'll be looking more so for a bigger potential rollover move. What's interesting is this could keep running with cycles going up. We could still get some nice upwards price action through the next little bit of earnings. Guaranteed? No, but nothing's guaranteed. NASDAQ, again, we got above that 75% harmonic, so we do have a potential double top. Key breakdown, 11,308.50. As long as that's not taken out, any pullback would just be still potential buying opportunity. So key pullback areas I will be utilizing. Remember, same thing, clear path. So I will be utilizing the harmonics. 11,647. Then right around 11,590 to 11,600. Right in here. Then I would be coming back to about 11,540. Right in there. Those are my key levels I'll be utilizing. To the upside, 11,703. We should take that out. And then key, very key level, is this other, the bigger 62.5 harmonic. This bigger one. Let me change the color here real quick. Change the color. Changey. Why am I watching this one so much? Because we get the close above there. I will then be utilizing the next major target would be 11,942. The minor targets 11,816, 11,872. First major target 11,942. Coming in also with this little candle topping area, not the wicks, but the candle topping area, much more important than the wick there. Then I would not target the 87.5 yet. I would target the 200. About 12,100. Cycles trying to put in a bottom on the daily and on the weekly, still climbing towards the top. Also, considering if we do get above that 200 and the 87.5, what's my next major target besides the spike high from mid-December? The 50-week, 12,339. The only thing that really shifts me into more aggressive bearish mode is that close below 11,308. Even on that, I'd just be okay. We got getting some short-term pullbacks. I'm going to be watching for bottoming patterns and reversal patterns. If we shift below 11,308, since we do already have a double top in place, potential double top, that would get me into bearish mode to return to the lows from beginning of January, from the lows in November, the lows in October. Other than that, I got to stay in short-term tactical bullish mode. So, good afternoon, Donald. Ohio governor says Intel canceling groundbreaking on that's interesting. That would be very interesting news. I'll have to look that up. So, Dow. The Dow. Again, we still have the remaining on the double bottom pattern. Hit the first stop reduction target. 35,520. Next target 33,520, 33,580. The key stops for this at this point utilize right around 33,200 on a closing basis is the farthest away stop. That would invalidate the pattern. On the other way, this is where I will utilize the reverse harmonics. And look at that, 37.5 with the double target. with this breakdown zone. Look at all this. Look, breakdown zone, double target, 37.5 harmonic. Fantastic fantastic next target. Then 33,760, and you're into a clear path move. 33,942 on a closing basis in front of that 33,940. I mean, just behind it. That would be my target for a closing basis, and anywhere in here we could get a little rollover move potential, but above there, 34,000, this breakdown zone, then we got the rest of the harmonics going higher. So that's really it. Do we have a significant topping pattern? No, we do not have a double top here. However, we break down below 32,750. Quick trip, we got a little support zone right at the 200, 32,404. Now the Dow starts getting a close on a daily basis below 32,404. Could be a early warning sign that something's just not sitting right. But still, below that, in order to get super bearish, remember the Dow's been holding up very well. In order to really start breaking down, what would catch my eye, the warning sign would be a close below the 200. We start getting a close below this 31,930 area. Not only does it break this key little rotational support, it's also closing back below the 50. That's going to get very interesting pretty quickly. Until that happens, there isn't anything aggressive on the short side. Russell, same sort of stuff as I'm watching with the S&P. This did not get a close above the 62.5, so my next level is 1885. And then really significant is this 1895. That takes us into potential double top territory. Keep in mind also, clear path move, breakdown zone. Your next key target based off the clear path is 1890. So targets I'd be utilizing for beginning of the week would be 1885, then 1890. Hope that's pretty on the pullback area. Hold on one second. On pullbacks, I'd be utilizing 1863, about 1853, and then right about 1846. The DAX, what I am watching, 15,193. A close above there, then I'm targeting this high area from back on Wednesday. All right, that's really about it. Then we'll do the harmonics. It's pulled back into the daily rotation zone. I'm watching for a rotation back up. By the way, in the DAX, a takeout of the high is an intraday play for a %B rotation up and a rotation zone rotation up, but it could only be carried through from a %B play on a close above Friday's high. And there is still a gap left here between Wednesday and Thursday that we could have a gap magnet, and that gap magnet is 15,246. Notes, I'm just keying. There's not a great pattern there. If we start breaking both Friday's low, I'm targeting 114.12. On a rotation back up, I'm watching for a retest of this 116 area and a potential topping pattern. Dollar index still holding, hovering around this 50% level and very key support. I'm watching Friday's high, not only because on a break above that, it would be the %B as long as it closes above there. But my first target would be, at least for stop raise, 102.81. Other than that, it's trying to level out, put in more of a bottom. Crude triggered the double. Yes, we do have a double top potential, but the double bottom's been triggered. Now it is overbought with cycles at the top. So on a tight stop basis, it would be on a close below 78.45. On the full invalidation of the pattern, because you could get a pullback, the full invalidation of the pattern would require a close below 74.36 or a trade below 72.94. So I said this would be a patient entry for me because of where cycles are. Or if it's an aggressive entry, then it's using the tighter stop and then watching for a re-entry at a lower price. Gold still watching for a topping play, just nothing yet, so it's still in trailing mode. We had a little sideways correction to the rising rotation zone, but it's still in trail mode there. Copper still seeing if I'm still in order for me to get bullish again after completing that double bottom. Need to close about 432. Being very patient since we're not getting pressure yet on this 50% J on the 10 years. Being very patient on looking for anything from the short side just yet. Again, on the US dollar, Japanese yen. I'm actually starting to lean towards watching for a bigger corrective move and then the next rollover play. Now we start seeing the 10 years start spiking back to 50. I'll be more interested in another rollover play. Euro, watching for a potential topping pattern, but nothing yet on a rally above this 108.80 area, 109.40. Pound, the only thing that really I'm keeping an eye on is this pretty substantial double top pattern. If you break above the highs from Wednesday, 125.22, 125.98. Bitcoin still overall in consolidation, watching now for a pullback in Bitcoin with bearish divergences. Pullback level is 21,300. Other than that, if you're watching for the next key bullish area, if it does break out again, my next major target is 24,575 area. All right. Options, you wanted Apple. So we got a pretty good roadmap, I think, going into this week. This is a potential double top with the rotation zone out of the way against the 50. Remember, it needs the close at least on a 4-hour basis below. You could go aggressive on a 1 hour since you can always shift down one time frame. You could always go aggressive with a 1 hour close below 133.77. The better close is the 4 hour. So that is your only bearish pattern in Apple right now. So that triggers. So if you've gotten long any time on this move, then that's a great, fantastic stop level from my perspective. Remember, Apple, have they changed this yet? Is it still Thursday the 2nd, or did they revise it? The next targets, the upside from any long, was a long rotation back up on the 4 hour and with the daily against the 50. So as long as it doesn't close and trigger the double top, the next levels are 140.42, 142.22, and you have a gap left behind from the 14th to the 15th of December. So the target then what I would utilize is 143.21. Thank you. Thank you for putting that in. What's not a double? What are you talking about, Coco? Are you just in an annoying mood today, or what? Won't hold you to it, but given the bear market and recent price action, do you have any short or put candidates for any large cap tech stocks? Well, you got one sitting there right there with Apple. as long as it triggers. You got one sitting here with Microsoft. I'm going to use the aggressive targets right now just because we don't know what the conservative ones would be just yet. I have to actually put on the conservative ones for this one because if it rallies up a bit more, it might be invalid. Let me check that 4 hour. This is where it helps to go through the time frames. See, it really is. It could rally a bit more and keep that, but you do have a potential double still in Microsoft going into earnings. I mean, those are two of them. Google, you have nothing just yet. Google, you have nothing. I'm still expecting a retest of the $100 mark in Google. The only thing that's interesting is if Google rolls over before earnings and starts breaking below Friday's low, the only very short term is a gap fill play. So Google's got nothing. Netflix has nothing. Because this is nothing. The only thing in Netflix, which would be short term if we get weakness, because at least earnings is out of the way for them. If you break below Friday's low, you have a really potential decent gap fill play, but I'd play it first to the opening price without doing other gap fill levels and everything else that we do. My first target would be to 322.57. So that would be another short-term play. But that would need a breakdown below Friday. What else do we have? Just looking at some other stuff real quick. NVIDIA has a double. Now remember, if these continue to rally, like if NVIDIA rallies up to this 87.5 harmonic, the double's probably going to be pretty much off the table. But if something happened and it decided to take out before it invalidated a double, if it decided to break down below 167.31, you got a downside play. So do we have potential double setups? Yes. Could they all be negated tomorrow or by Tuesday? Yes. Because we have nothing even confirmed, let alone triggered. Nothing in Facebook/Meta. The only interesting thing is if this goes into earnings, if it does bounce back, you got the nice little play, potentially 4 to 200, and the 62.5 harmonic from before 155.19, so 155 area. If we really get a blast off it with the NASDAQ. Intermediate levels, but there's nothing really bearish in Meta at all at this point. The intermediate levels that I'd be utilizing is 144.60, then 150.80. Also keep in mind it's going into a clear path move on the weekly, so you can use your daily stopping points in here, especially, you know, you can help fine tune some of these harmonics. Copper to head to 418 or 432 first. I have no idea. I think it's still very overbought, but it's still the China reopening play. It hit the target, so unless for me, and it doesn't have a really strong bearish setup yet. 118 or 132. This is in no man's land right now. I don't even have a short-term trade set up yet. Based off of this little pullback, see, it didn't even close above the 62.5. I was going to say, if it closed above the 62.5, that would give me probability odds. I'd still probably favor another upside push because it's still holding up nicely. But it cycles at the top and very, very overbought. When this thing does correct, it could correct pretty quickly. Good evening, PMG. Tip rank says Apple earnings. Can you check PSFE? PSFE? What did you want me to look at? I want to see if I did the charting correctly. Hey, Dr. Michael. Jay has a triggered monthly double top with a potential weekly double top. Was the best bear setup? Well, thank you. We'll take a look at that. I don't know what you want me to look at with PSFE, Martinez. I mean, key stuff I'd be focusing on is a return to that potential weekly. The daily 200. Your key breakout area is here. Your reverse harmonic, since you don't have a good pausing bar, is right there. And look how that lines up. Your retracement, this is so that anybody can follow along. On any pullback, I'd be watching your 12.5 harmonic with the breakout level is a really nice support area with the rising daily, and I guarantee that's going to be close to the 4-hour. Yep. So that would be my first pullback levels for watching for a new rotation back up. Other than that, my next major target would be $23, roughly $22.98. Let's get to Jay. Jay has a triggered monthly double top. Yeah, that's with a potential weekly double top. I mean, there is a potential breakdown play here. Yep, completely valid. So that's something to keep an eye on. When are earnings? Tuesday the 7th, looks like. So that's a couple weeks away, so there could be a play in there on Jay. Thank you for posting that, Sterling. You are welcome, Dr. Michael. What? The potential weekly double top may not be valid. It's valid. This is valid. Can I short gold? I would not be shorting gold. There's no great pullback yet. It's over. If you're going to look to short gold, I'd at least wait for some kind of breakdown pattern. The earliest breakdown pattern would if it gets back below 1898. And that's aggressive. It's very aggressive because this could easily just pull back to about 1880 to 1858. Yes, there's a little pullback, but I'd rather be watching for something to go long in gold after the pullback again. Now, it is very overbought, but you're running into rotation zones, which is why I would not be aggressively looking to short this. There's other stuff that's shortable. Because it could catch anywhere, so you'd have to be really nimble. So I would not go out and tell people to short this without a major great pattern. B, what is that? ZB? There is in your T bonds. I could not see that with the X. I thought that said ZBI, you know. Like, okay, ZBI. But this, yes. There is a potential double top, but it's a long way off. Coming up in this vicinity of the 200. That's the only thing. Now, that's a long way off. Long way off. Your early warning sign on that is a close below 127.19. Other than that, there's not much unless you try to get down to the shorter time frame. So that's your major pattern. There's going to be pretty substantial overhead resistance up here. So even on a rotation back up, what I'd be watching for, if it catches here and rotates back up at the beginning of the week, it's forming another potential double within a double against the 200 area. Then it could get interesting. But other than that, notes and bonds don't have any great, for my short-term, great setups at this point. What's the name of the tick chart you use? The tick, what? The tick? TICK? It's just a New York Stock Exchange cumulative tick. Is that what you're asking? This one? Or we use the tick Q, which is the NASDAQ combined tick. Those are the two, if that's what you mean, those are the two I utilize. I'm watching for a quick, if we start breaking some key support, there's not a great short setup yet, but if we start, I'm watching for a rug pull, by the way, in Bitcoin. But there's not a great short setup yet. Still trying to hone the head and shoulders pattern. Is there a weekly triggered inverse head and shoulders in AOS? A weekly inverse? Yeah. On the, yep. Shoulder, head, shoulder. Again, what I'm going to teach more of with people is the conservative entry. In these kind of markets, I've been doing much. There's two things I've been focusing on, two major, refining the pattern over the last couple years with doing some more testing on probabilities, and I'll go into that more in the future. But there's two key areas that this one did not trigger yet. Watch for a close above about 62.50 to really trigger that pattern based off the way I'm going to be teaching it in the future. Your probabilities will go up. But right now, the targets will not move. 60, essentially 70 is the first target, 74, 78. Your communications has been outperforming everything in the short term. Well, you might have some short setups with Verizon and AT&T, although there's nothing fantastic yet. They both have earnings coming out. This, though, see something. AT&T, I was actually watching for a, let me take, hold on. Oh, don't do that. I was watching for a breakout play that has not manifested yet. But now with this little thing, I am keeping an eye. Here's my only short setup that's really nice is for AT&T with earnings coming out. Close below 1764 at least on a daily basis. Then you get a pretty decent return. So I'm now keeping an eye on that too. I still am watching for the breakout play. However, if that does not manifest, especially with earnings coming up, and if they do a miss, now we have a weekly potential breakdown play. But I would not try to front run it at this point. That's the one I'm watching in communications aspects. I did put up a members only thing, watching for that breakout play. Never could get the traction. Still watching to see if we had an earnings for it to get back up there. But I am keeping a very close eye post earnings on this breakdown play. All right, that's what you wanted, the cumulative tick. You're welcome. So that means we could be getting near a bottom. Thank you. Bear better than beer. Dollar index could be getting near a bottom, which would be interesting from an equity position, because then if the dollar gets a rally on, I'll really be watching for a rollover in equities. Options 22. Thank you for the super stickers. Wow. Thank you so much. Thank you for the two super stickers. Again, supporting the channel. Really, really appreciate it. Options 22, one of our wonderful longtime members here. Everyone, please attend every live stream. Mike is a fantastic teacher, and the techniques he teaches are incredibly powerful. I learn something new every time I tune in. Well, thank you, Sterling. I really appreciate you being here and everything you put in to the chat and helping everybody. I really do appreciate it. And I try to share as much as my knowledge that I can without confusing people. Oh, by the way, with that AT&T, look what else we have here. This could get interesting if AT&T does break down. Something to keep an eye on. I would set some alerts down here if it misses earnings, if you're looking for something on the short side. Well, thank you. Thank you for that, Options 22. I really do appreciate those kind of gestures. I really do. And again, all this stuff goes straight back into me teaching in the channel. It does not go to buy steaks and wine. No, it does. I enjoy teaching everybody here, just trying to share. And I hope people can carry on knowledge. And hey, if you can become a better trader and investor, please continue to pay it forward and help as many people as you can in life. Really make a difference in this world. That would be another gift to me, that people can carry this forward and, help people. Lots of people struggle, and there's lots of fake, crappy teachers, and let's try to make a difference with helping with whatever knowledge you have. Doesn't have to be market knowledge, whatever you can help people truly learn and utilize to make themselves more successful. Please be willing to share that. That could be another gift that makes this world a better place. Thank you, Sterling. Thank you very much. I really appreciate those. That's very nice on a Sunday. Some Sundays I just don't feel, you don't feel like getting in front of the computer and doing a live stream. I'd rather plop down on the sofa, put on some football, especially during playoffs. But, we all have to prep for the market. And I'm not going to leave people high and dry, and at least give you my thoughts on setting up for the next week. So I don't think, again, the VIX, I did post that, what I thought was that interesting article on Friday. If you did not get the chance to read it, I know some of you did read it. Please check that out if you're on Discord under articles. If you're not on Discord, it's a cheap, inexpensive one-time fee. I don't even do that to make money. That's just administrative stuff. Again, it's to share information and then people can chat among themselves and help each other. I'm not seeing a lot of other things I want to talk about. Let me just see. I'm just glancing at here again. AT&T is Wednesday. Oh, we didn't look at Tesla. Which is earnings this week. I will be watching. It's not there yet. I will be watching for a little micro double top in there. But even if we break below Thursday's low, you still have a gap. You have a couple gap fills to the downside, which I just utilize for targets if we break down. Now, for the upside, again, if the market stays in strong rally mode, we got a nice pausing bar finally. And look at this. Look at this. Harmonic cluster, 140. What is that? 141, 140, just call it 141, then 145.40. And that just takes it into the weekly rotation zone. If Tesla were to do something surprising and really to the upside, my only thing, and there is no solid setup, it would just be a short-term breakout trade, would be a return to the weekly 200 within the rotation zone to watch for another significant. I am leaning for a rollover play, but again, there's no strong short setup just yet. We just double check. This is barely not, did it hit that 133.59? I didn't think it did. 133.51, no. We might get the potential double top in place tomorrow, but it could also get invalidated tomorrow. So, one thing I hope you learned before I wrap this up is you see why, because I base stuff on probabilities and test out patterns. I don't just go, oh, that's a double. Let's not measure it. Look, but it's 8 cents away. Why don't you just assume it's going to be there? Because, you know what? If, let's say, we gap down tomorrow below this low, I can't use the double targets. I do other targets, but I can't use the double targets. So we're not going to assume because I'd be making flawed stuff with probabilities. So that's why it helps to measure stuff out. Don't just assume. Don't just guess on your pattern. It says, that's close enough. The more that you can learn to repeat the same behavior over and over again, at least you'll have a consistent baseline. Then once you have a consistent baseline, you can work on making modifications if they need be. But if you don't have a consistent baseline and you just start changing things randomly, you don't have anything to measure against. You don't have anything to see how your trading evolves. You don't have anything to test against. So you have to have a good solid base case. So whatever method you're utilizing, whatever structures you're putting in place, make sure it's consistent and as absolutely repeatable as possible. Don't just shift all over the place. Like today I'm using the 5-period RSA. That didn't work today. I'm using the 3-period. I'm using the 7-period. I'm using the 14-period. I'm using this. Screw RSI. I'm using stochastic RSI. I'm using stochastics. I'm using my MACD crossovers didn't work last week, so I'm shifting my MACD parameters. No, you got to come up with a consistent baseline, and then you have something to test against and to validate against. With that, what has also has a triggered weekly double bottom in what? So the consistency also increase your confidence. Confidence is what keeps me in trades and possibly more importantly gets me out of trades that didn't go my way. Yeah. And again, no, nothing's going to work 100%. Look, traders, I've seen traders that I've taught that I could get into the 70%, which is incredible. You can make very good money. If you're, so are you still, let's just call it 70%. You're going to be wrong 30% of the time. You're going to take stop outs. But a lot of people can't even handle 30% of the time being wrong. But that's where consistency. So, I mean, even if you're trading in the 60%, oh, HAS. I didn't see that. Thanks. I was reading it as has. Yeah, it's a lower probability double. It's a lower probability. Pay attention. I like the doubles, and it's still decent probability, but it's lower probability. Why? Because the rotation zone's in the way. That's why double tops and double bottoms, where the rotation zones are out of the way, have higher probabilities. It tests out, and sometimes against these weeklies, it's 5 percentage points higher, and 5 percentage points makes a big difference. Not saying this one won't work. It's just I'm pointing out that's why I much prefer the doubles with the rotation zone out of the way, but this is completely valid. Completely valid. Also, when the rotation zone's in the way, I generally look for bigger pullbacks. Why do I look for bigger pullbacks? Because this is a little tip for you. You generally get bigger pullbacks in the rotation zone. You get better entries, and then you can use tighter stops. So your reward to risk gets a lot better. So even if this is one that's lower probability, you get a higher reward to risk ratio to offset the slightly lower probability. That's why I'm very patient when we're against rotation zones on higher time frames, especially daily and weekly time frames. I watch for those pullback entries. That's just another little teaching tip. All right, with that, thank you again, Sterling. Thank you for the super chat. Options 22. Thank you for the 2 super stickers. Again, big shout out to Sterling and Options 22. Thank you, everyone, for tuning in and taking some time with me on a Sunday afternoon. I will be back at 8 a.m. tomorrow morning. And still going to be watching for some higher price action tonight when the futures do open. So, chat with everyone then. Bye for now.